Hi, I'm jpmorgan's chief economist, Bruce Kassman, and with me today is Matt Boss, our resale analyst. We're going to talk about the holiday shopping season. And let me start as the economist by saying the backdrop for the consumer looks pretty darn good. We've got an economy that's been growing at a rapid pace, and it's been generating very strong job growth, and importantly, wage gains are starting to pick up. The only cloud on the horizon, and we think it's a small one, has been the rise in energy prices over the month and summers, which we think are going to show up with somewhat higher inflation in the fourth quarter, but that's already started to roll off. So Matt, what's the story about the consumer and retail going into the holiday season?
Great question, Bruce. It's interesting to us because across retail, we started to see broad-based strength really starting about a year ago. But now we're seeing an acceleration. We've seen an acceleration as the year has progressed. We're anticipating actually a very good holiday, actually a very good back-to-back holiday season. And as you touched on it, the three key factors I would say that we focus on are unemployment at a 49-year low. Right. We're seeing tight labor markets. And with that, we're seeing wages potentially accelerating and starting to see this type of acceleration. And I'd say the third thing is that the savings rate seems to be in a very good place. I think we're in mid-single digits at this point. So from an economic perspective, which you could probably touch and add more to, I think we're in a very good place for this consumer narrative to even continue.
So against that positive backdrop, what specifically should we be looking for in the holiday season?
I'd say the headline out from us and our projections and our outlook is, I think you're going to see the best back-to-back holiday season in 2018 that we've seen since 2012. So the best combined last year, which again, that's when we started to see this acceleration in really the reported numbers from retailers across the board, department stores, off-pricers, all the way down to the global brands. Mm-hmm. So basically started last year. This year, you're going to see gains on top of it. In fact, we're projecting 160 basis point sequential increase in the two-year stack, and that's the best that we've seen in more than 5 years.
So strong and broad.
Strong and broad across basically everything that we cover. I'd say one last thing that I would say from a thematic standpoint that I think is interesting, we're starting to hear about retailers talk about consumers actually trading up. So I have numerous different, all the way from the low-income cohort, even all the way up to the more aspirational. We're hearing about wanting national brands, moving away from private label, a couple extra dollars in the pocket. I think some of the tax dynamics that we've seen this year could actually continue into the early part of next year, especially the child tax credit and some of the tax refund dynamics in the beginning part of next year.
So I don't think we've said anything that's of any great concern up till this moment. Right. Is there anything that you kind of have a hard time going to sleep at night thinking about that concerns you about the retail sector at this point?
Yeah, so I think it is really important to differentiate between the consumer dynamic and the retail dynamic. And I think in my sector and across retail, this is where you can run into some potholes, meaning everything we've talked about is that the consumer strength, and I would say we're probably looking at the best consumer metrics, the best consumer strength we've probably seen in a decade. And most of the management teams of the companies I cover would definitely speak to that. That being said, number one, we have retail consolidation. We have more bankruptcies, more store closures in the past 2 years than we've also seen in the last decade. So the consumer is choosing between value, convenience, and innovation. If you're not checking those buckets, you could have that strong consumer, but you're failing as a retailer. So things that we're watching on the horizon, number one, you have the tariffs. And so for the global brands that I cover, it's not just the dynamic around Washington, but it's also the macroeconomic impact on the Chinese consumer from a domestic tourism perspective that we're going to see here, but from that China on-the-ground exposure. Number two, I would say, is the inflationary pressures. So we have rising transportation, which you touched on the freight side, but we also have rising wages. And so that's a dynamic as minimum wages are rising. We have retailers that need to get to that $15 over the next couple of years, and some that's going to be a rising SG&A and a rising expense pressure. So I would say two inflationary pressures, and one being more the larger picture dynamic around the China consumer as well as the tariffs.
Okay, well, that's the picture. Looks pretty good. A couple of things to be somewhat cognizant of in terms of risk, but generally a pretty bright outlook. Thank you very much for watching, and if you want more information, please go to jpmorgan.com.